We're live. So some of you guys have been asking me questions about whether I thought Bitcoin was a bubble or not. Now to answer that, we're gonna dive right into my thoughts. And now before we do that, I want to remember to thank all of you for liking the video, so subscribing, hitting the little bell, and commenting. Any of the thoughts that you leave, we do our best to make sure that we answer those. So as we do these videos, we will make sure that the top listed questions that you guys ask will be answered. Now, for those of you that have been joining us for quite some time now, we've been watching Bitcoin's price rise from the $600 mark all the way to $20,000. The CME started trading futures on Bitcoin in the beginning of December, and from there we saw a lot of price volatility in the upwards direction. Been a lot of misunderstanding in the ecosystem as Bitcoin's price then fell down to $6,000. Now, on the log scale, it's actually not that huge of a difference. Bitcoin's price has actually dropped more than that before. Now, to the question of whether Bitcoin is a bubble or not, no. And why do I say no so forcefully? Well, bubbles pop. Once they pop, there's no blowing that bubble back up again, unless perhaps it's bubblegum. You pop a balloon, that's it. That's the end of the days of the balloon, unless perhaps you're a magician. Now with that in mind, in fact, it's proven anti-fragile every time that it crashes, because it keeps rising. The volatility has been only on the upwards trend. We could use the same thoughts and sentiments about gold. Well, gold is been a money for a very long time. Prices have obviously gone down, but in relationship, Bitcoin in my mind has become a money. From its early days as a decentralized cash system, it now has turned into an incentivized savings and speculation vehicle as an asset class, and for better or for worse, the ecosystem has gone global. I think that's for the better. But with that in mind, what we've noticed is a lot of people are claiming, oh, it's like a tulip bubble. That's not true. If you want to do your homework and your due diligence, is the US dollar 100-year chart has actually been doing nothing but declining with lower highs and lower lows over the last 100 years. This is not a very satisfying form of money, and it's one of the reasons why we initially transited into the use of digital assets, cryptocurrency, and blockchain disruptions such as Bitcoin, Litecoin, and the rest. That still doesn't necessarily answer the question. So are there any other credible sources to say, oh, what might this? So that's what it comes down to. We took a look at the tulip bubble just to give some explanations here. As Bitcoin and the rest of the digital asset market continues to rise, there's an increasing number of critics that have compared the meteoric surge of Bitcoin to the tulip mania that gripped the Dutch Republic in the early 17th century. Now there's no doubt, there's no doubt that the current boom which is being seen across the digital asset space could be a bubble, especially considering how many new tokens are being created on a daily basis, but is in no way comparable to the Dutch situation. Bitcoin was invented in 2009 by a group or person under the name of Satoshi Nakamoto as a decentralized peer-to-peer cash. Bitcoin's transactions are completely traceable and every single transaction is then public. However, the ledger only records the wallet's money that is being sent to, and it's possible to create a wallet without your identity being verified. Again, this is important to remember that Bitcoin is a peer-to-peer money or cash, whichever you'd like to look at it as, and because of that, if you lose it and you're in control of it, it's gone. I've been invested in Bitcoin since 2012. I've seen many come along, such as Litecoin in 2011, Ripple 2013, and then eventually Ethereum in 2015. These are just some of the now over 2,000 different digital assets, cryptocurrencies, blockchain tokens, whatever you'd like to call them, on the market today, and there are more created on a daily basis. These are the kind of returns that continue to attract the investors, and it's a steady influx in new investors kind of pumping this money into the digital asset space, and the total market capitalization surpassed at one point $650 billion. This is not in any way similar to the tulip mania as many commenters have suggested. So what was the tulip mania? In 1630s, the Dutch experienced the first recorded speculative bubble ever in history, and tulips had arrived only in Western Europe and were highly sought after due to their beautiful, vivid colors and intricate patterns. The small supply and increasing demand naturally led to surging prices at the time as investors began to speculate on the price of the tulips that had not yet flowered. People were signing contracts to buy tulips from future months, and at the peak of the bubble, a single bulb was sold for over 12 acres of land, and there are stories of people selling their entire houses to buy a single tulip bulb. In February 1637, though, the bubble burst, and within a few months, the price was back to its original levels. It's one of the most widely used examples when people talk about asset bubbles, and thanks to both the obvious and inobvious absurdity of selling your house for a flower and the huge amount of rapid price changes the goods concern, it is not a Bitcoin bubble. It was a tulip bubble, yes, but not a Bitcoin. Bitcoins are not tulips, and the tulip mania is a perfect example of speculation driving prices to absurd levels, but But applying the same principle to Bitcoin is debatable at best, as many believe the cryptocurrency or digital asset is essentially an electronic store of value, much like gold is a physical store of this value. Most importantly though, both Bitcoin and gold are durable, scarce, fungible, and divisible, making it therefore a money, whereas tulips are neither of those or none of those things. Most importantly, there are always ways of calculating the fundamental value of Bitcoin, such as mentioned in other previous articles, which we'll post down below. We do not make these far-reaching assumptions to help validate its current evaluation, but it does help understand the difference in between these subtleties. Secondly, the tulip bubble happened over a significantly shorter period of time, with the most of the price growth occurring within the space of 3 to 4 months before it peaked. In comparison, Bitcoin's price has been going rapidly and steadily for well over 7 years now, and despite some small crashes along the way, it continues to forge its path onward. So this was my answer to is Bitcoin a bubble? I still think no, and well, no. I guess in conclusion, the easiest way to look at it is that the variety of products offered by the digital asset space, sustained with price growth over the many years, has most importantly the revolutionary technology underlying it that suggests instead of serve as a comparison to the .com bubble and not a tulip mania. So remember to like, share, subscribe, comment, and enjoy these videos, ladies and gentlemen. We will be doing a Ask Me Anything every week, so if you're interested, the top question or any of the questions that show up in my email inbox that have been repeated, you can email me askmeanything@arcanebear.com, and we will do a bi-weekly video where we answer your guys' questions. So thank you for asking. The question is, do I think Bitcoin is a bubble? Steal with the Arcane Bear. Remember to join us on Telegram, all the other places, LinkedIn, Steam, at Facebook, Twitter, and all the other social media platforms. Thank you guys for joining us today. This is Steal with the Arcane Bear, and we'll see you on the other side.